Good morning, ladies and gentlemen. Thank you for joining us today for our webinar on buy now, pay later, of whether it's a force or good or evil. Special thanks to our panelists for sparing their time to be with us today. Now, buy now, pay later is arguably one of the hottest trends right now emerging in the fintech space, maybe other than digital banking, which is dominating the headlines today thanks to the deadline. Now, nearly on a weekly basis, we are receiving announcements about BNPL, someone entering the space, new partnership, fundraising, and market expansions. Globally, analysts estimate that BNPL could grow between 10 to 15 times to the tune of $1 trillion by 2025. Now, with this really rapid growth that we're seeing, concerns are surfacing around the impact of buy now, pay later scheme on consumer debt. And regulators around the world are also keeping a close eye on how to regulate this new segment. But BNPL is quite new in Asia Pacific. While it's still in an infancy stage, we thought it'd be important to have a conversation, discuss the merits of BNPL, and kind of have it, kickstart at the right footing here in Malaysia. Now, joining us today to discuss this topic, we have right on top there Dom Braun, who is the Managing Director for Asia Pacific in Episode 6. Below Dom, we have Suraya Zainudin. Suraya is a financial activist and the founder of Ringgit. And below Suraya, we have Kevin Lee, the CEO of GHL Systems. And below Kevin, we have Arvin, who is the COO and Co-Founder of hoolah. Folks, welcome to the show. Thank you for joining us. So maybe we'll begin by answering the title of the webinar, right? Whether BNPL is a force for good or evil. And we can start from the ascending order. Maybe we'll start with Dom, then Suraya, then Kevin, then Arvin. Dom, what's your take on this? Is this a force for good or force for evil?
Yeah, it's a good question, and I think a lot of answers possible. I think in general, when I look from a general perspective, it animates to consume more. Yeah, I think from an individual standpoint, from a wealth building perspective, it's not good. So if you consume more, that means this money you can spend not be used to build your wealth at the end of the day, and potentially you consume and spend more over time. On the other side, to find a general answer is hard to say because it really depends from what kind of position you look at BNPL in the market and whom you target as a BNPL operator. Maybe one example is consumers can gain flexibility to be able to stretch their payments over, for example, 3 installments and are able to buy goods, which they sometimes wouldn't have been able to buy directly. And maybe these goods are necessary for your daily lives, which would be actually a good purpose of BNPL, yeah, and that results ultimately into higher sales for retailers and give job security to staff and generates more tax revenue. So it actually supports the whole economy. And just to mention one downside, maybe is what you also mentioned already, Vincent. Consumers actually who are not able to get, for example, a credit card, yeah, due to their credit risk profile or debt situation, might be able to use BNPL instead as an alternative, and it could increase the debt spiral of that individual, and that's the potential of write-off and loss of the underlying guarantor of BNPL. And so there are many pros and cons from my perspective.
Thank you, Dom. We're really seeing a lot of comments coming in, a lot of questions. Obviously, this is a very hot topic for everyone. Actually, we had like over 400 people registering. So bear with us as we try to go through some of your questions. Feel free to ask, but we might not be able to get through all of them, but we'll try our best. Now, let's move on to Suraya, who I think has been quite a vocal critic in this space. And I'm sure we already know more or less where her stance is. But Suraya, tell us about what your view is on BNPL in this space.
Thank you, Vincent. I believe that everyone in the panel knows my position in BNPL because I wrote that one article that's very critical about it, and it was read by thousands of people. But I'm just going to share again for the sake of the audience. On the nothing is binary, but I do think that BNPL does more harm than good. The only way that you can justify BNPL is if it's used for health or safety-related purposes. But the thing is, most of the BNPL services out there are mostly promoted for consumer goods. So you have to remember that BNPL's target audience is the consumer debt market. So these are people who are used to financing their lifestyle with debt, or they want to if given the chance. And when you combine that with the fact that Malaysians have generally low levels of financial literacy and also high household debt levels, and then Salaries are also not increasing. As a Malaysian, I'm a bit scared to see how this trend will grow in Malaysia. And like, to be fair, I know that it will grow. I'm just really, really worried, and I don't see how it can be a sustainable practice for the long term.
I see. Well, thank you for that view. And I think, you raised some good points over there. And what we're going to do is we're going to run through all the views from the speakers. And then if anyone disagree with any of the view, they can later jump in once everybody has kind of laid their position. Thank you for sharing your insights with us, Suraya. Kevin, what is your stance on BNPL in this space?
I think what I'll do is I'll break them down into two parts. One is from the business perspective, from the merchant, right? And then the other one is from the consumer standpoint. I think from the merchant or from the business standpoint, there is definitely advantages for them, in terms of opening up a certain consumer segment where they do not have today, where traditionally, you don't accept installments, right? And typically, installments today is only for certain segment of customers, higher ticket size and whatnot. So I think with this, it definitely opened up a new segment of customers walking in, and of course, increasing their basket size as well. So and also not having to worry about whether do I get paid later or not. I think that's the standard question from the businesses, right? And with this is that there's actually no risk from their perspective. So I think that's an advantage from the business side. From the consumer side, it's if you look at buy now pay later, it's very much targeted to the segment of customers that do not have credit cards, and it's very much the debit consumer. But to me is that I think it's also not fair to say that if I'm splitting my amount in 3 months, that's because I don't have money and I split it. But eventually I have money in the next month. It's just that I'm splitting my expenses across 3 months. But that doesn't mean that I do not have money to pay for it, and from that perspective, So and credit card installments has also been on the market for some time, and I think just because BNPL is new, that there's more negative impression, to it. So I think that's what I think.
Thanks. I'm trying to unmute my mic, right? So I was like, oh, what's going on? Thanks for your views, Kevin. And I think there is a lot of points made over there, and there are things I agree and disagree with. But I think I'll leave it to the panelists to voice their views before I jump on in, because I'm sure there's a lot to discuss over there. Arvin, what is your? I guess we know your take, but maybe you can elaborate your stance on why you think BNPL is good for society.
Absolutely. So I think to answer this question effectively, and I see some of the comments coming in, there's a view here that I don't think we've done enough yet, obviously, because it's such an early stage to actually share what is BNPL, right? So I want to set the stage with this, is that this is not a highly penetrated product that the large proportions of the population are using today in any Asian market. We're still at the starting point of bringing BNPL to the market. I think it's important to understand how does it work, like what is BNPL, and clear up some of the misconceptions before we determine good, evil, or such broad strokes of conclusions on a solution. So it is bringing technology to an outdated industry. I think we're trying to enable customers to get the products they want. We don't provide a line of credit or cash to a user to go buy anything. It is a limited construct where they can get a specific group of products rather than spend on anything that they want or desire. So first of all, you automatically cut out some of vice purchases as a result of that, right? So unlike a line of credit that you can go use to purchase whatever you see fit, it is different. I see a lot of comments coming through, how is it different from a traditional credit card-based installment plan? How does it operate differently, or how does the revenue model differ? I think it's really important that we call that out. Buy now, pay later charges the merchant a transaction fee. It's a business model that's not predicated on charging consumers. On a general basis, some BNPLs will take a stronger position on charging consumers certain fees, but generally it means that you open up to a segment of customers that actually don't have a credit card because it is not anchored to a single bank or to a single credit instrument or credit product that's out there with the banks. So essentially, if you have a card from a bank that doesn't have an installment plan associated with it, they haven't developed the solution or don't have access, it doesn't really matter. You now have a solution that can help you get the products that you want and need in that construct. So I think it's just really important to lay that out as the groundwork. Now, can it be used as good or evil? Probably pretty harsh terms to throw out one way or another. I think we've taken a position as a business and a philosophy that we've gone out with, which is around creating this value for consumers and for our merchants. Merchants pay us, and we want to create value for them as well. And we can talk about that a little bit later. But we do so through this concept of responsible affordability. It's been there from the day we started the business. It's been philosophy. It's kind of the soul of the business, and a lot of that comes down to transparency. Is there more that we can do to drive that? Definitely, and I think that comes with the growth that we're trying to see happen with BNPL. But there's definitely work to be done to further educate users, to get the message out there, and have the right messaging around BNPL as well.
Thanks for that, Arvin. It's a very comprehensive foundation to kind of set the tone for the conversation. Now, before I move on to my next question, I'd like to check if any of the panelists would like to refute, debate, or echo any of the previous statements that was made by the previous panelists. If you'd like to do so, unmute your mic and I will bring you up on stage. All right. If not, let's move on. Yes, Suraya, go ahead.
I am the designated person for this, so I feel obligated to say something now. So there's always in personal finance, there's the it depends kind of argument, right? You can get anything that you want if you can afford it. So that's my main worry right now. And we have all this unsustainable, kind of like this growing trend of borrowing against the future. And BNPL is not the first person or the first, service to offer it. Credit cards have been allowing that, and the fact that mortgages have longer and longer term, and even car payments have, and all those. When it comes to credit, we are normalizing borrowing against the future. So I see this as yet another way for consumers to borrow against the future, which you can see that it's kind of uncertain right now. So you can see where most of my worry is coming from.
I can see that as well, and it seems like quite a few of the audience also agree with that viewpoint as well. Now, I'd like to kind of move on to my next question, and some of the comments here have also highlighted the same thing as well. So a lot of people kind of view buy now, pay later as just a newer and a more sophisticated form of credit, right? So if it's really just a newer and sophisticated form of credit, are the concerns over BNPL overblown, or is it really a legitimate concern in terms of the impact that it might have on consumer debts? Since Arvin is on top, maybe we'll get Arvin to answer that first, and Kevin, then Dom, and then back to Suraya. Arvin, go ahead. What is your stance on this?
Absolutely. I love this question because it allows us to talk about the incentive structures of traditional credit versus buy now, pay later. And generally speaking, traditional credit products are incentivized for you to make a mistake. They earn more when you don't pay on time, significantly more. And it's actually their main revenue source is when you fail to make a payment. I've been in that bucket. I've missed a payment, total accident, and then you wake up with that surprise, massive late payment charge plus the interest position that you're in. We're actually incentivized when customers pay on time. So it's really interesting that it is a flipped model in that sense. We do better as a business when consumers do pay on time. And let me just clarify what that means. It means that essentially we run a working capital position, right? So we have cash that we need to pay to a merchant prior to a consumer paying us. Anytime you have cash, it costs you money to obtain that cash, the interest rate that we paid to borrow. The later somebody pays us back on that, the more it's going to cost us as a business to not receive those funds. So our entire construct as a business is predicated on helping merchants get those transactions through, but from consumers who are actually going to be able and willing to pay on time. So I think that's a really big distinction from a traditional credit product that is incentivized when folks don't pay on time. The other big difference, I think, from a credit product is that you have a dollar amount. Here is 1,000 ringgit. Spend it as you see fit. We, on the other hand, are allowing you to get access to a product or a certain group of products or a specific item, which certainly limits the flexibility of how and what you can go out there and just get access to. So we're really accessing that product rather than a blank check for you to go do whatever you want with it. So it is quite different in that structure.
Thanks, Arvin. Now, before I move on to the next panelist, just to maybe stir things up a little bit over here, right? And you brought up the point about business models. And while I guess maybe in your case, the business models designed to incentivize for you guys to really want the consumers to be able to afford, to be able to kind of pay back some of these things. But at the end of the day, you have investors to answer to, right? And investors want to see growth. And the fastest way to push for growth is obviously luxury products, things that people desire, right? Things that people need don't push the basket value up very much. So in a sense, do you think that the BNPL model, it kind of, it's in opposition with a healthy consumer kind of habit? What are your thoughts on that?
Yes, it's a really good question because the data proves otherwise. The majority of what we're seeing, especially during the last year in the COVID situation, is that folks from different segments of consumers look at not luxury, but kind of those high investment items slightly differently. And I would say a large group of consumers over the last 18 months of work from home, and that the stress of being at home for 7 days a week, 22 hours a day probably, we saw a big shift in what customers were really interested in. It was ergonomic chairs, working desks, home appliances, coffee makers. Like it's not that they were going out there to buy a designer bag, and actually it's not something that we actually look at as a segment. We're more in line with that everyday product because we want folks to get the things that have an impact directly to their life. And from a consumerism standpoint, I do get that view, but really what we're seeing is folks making investments into slightly higher quality products as well. So there's an argument here to be made that by using a buy now pay later, at least from our view, our data, and even the interviews that I've done on a personal basis with users, is that they're trying to buy a slightly better product that's not going to be broken down in a short period of time that they need to go out and then replace again with another low quality product. So it gives you access to slightly better, maybe it's a better ergonomic chair than say that the one that's the entry model.
Right. Thank you for that, Arvin. Now, I don't want to hog all the comments and all the questions, so I'll move on to the next speaker. So the other thing that, just to recap the two questions that was asked earlier, right? The number one question is the concerns overblown since it's kind of just a new form of credit? And the other thing that I posed to Arvin is about the business model, whether it's in opposition with the whole consumerism sort of thing, right? So maybe we'll have Kevin on the floor to share his views on this. Kevin, you have the floor.
I think to the first question is that quite clearly that the BNPL products or buy now pay later products actually target a certain segment of customers. So I don't actually see that as as a competition per se. If you're talking about the traditional credit card installment, because it's clearly for a segment of customers that is either they're not eligible for a credit card, or they just don't want to use a source of funds which is from the credit, But in this case with buy now pay later, it's actually their own money, cash that they have, whether it's this month or next month, when my salary comes in. So I think there is a differentiation from that perspective. I think the other one is that, like what Arvin has mentioned also, is that the intention is that to ensure that people do not make late payment. Hence, there's no, I think most of the time, the selling point is that there's no late payment fees, as there's no interest and whatnot, for late payments and whatnot, compared to traditional financial institutions. And with that is that the main source of revenue or income is actually from the transaction fees, or what we call the MDR, from the merchant, So I think with having this thought process, then basically is that then how do we ensure that that we ensure that responsible spending is there, and how do we continue to educate the customers to ensure that they pay on time, and paying on time is a good customer, right? Because if they don't pay on time, then you have got people like Arvin that have to call up the customers and whatnot, right? So that's my view, broadly. These are the two questions, Vincent.
Right, thank you for that. Let's move on to Dom, and to recap, it's to look at the business model, and the other thing is the whole idea that it's a new form of credit, whether the contents are overstated. Dom, you have the floor. Dom, it seems your audio is not really working. We can't really hear you. Maybe we'll move on to Suraya first while you try to get your audio working. Suraya, what is your view on this?
Thank you, Vincent. We have had some comments inside the chat box talking about and even from the BNPL service providers themselves, talking about how consumer education is important, and I completely agree. Financial education is super important. Like I stated earlier, in Malaysia, financial education is a little bit on the lower side. Although we have been making, the authorities are making a lot of effort into improving everyone's financial literacy. Unfortunately, with the pandemic and all that, we also see the education gap kind of growing. I have seen statistics where it says, like a lot of kids are not in school right now. And these are very, very real issues. But in any case, I just want to point out that just telling consumers that they should focus on their own financial behavior and their own financial education is not enough. Like BNPL service providers themselves have to set up some inbuilt mechanism in order to protect, the consumers. So here, I do want to point out, like a book of mine. It's called Nudge, Improving Decisions About Health, Wealth, and Happiness, and it's by a behavioral economist called Richard Taylor, very popular guy. Just want to quickly read out the part behind here that says, no choice is ever presented to us in a neutral way, and that we are all susceptible to biases that can lead us to make bad decisions. But by knowing how people think, we can use sensible choice architecture, and that's the term that we can use here, choice architecture, to nudge people towards the best decisions for ourselves, our families, and our society without restricting our freedom of choice. What BNPL service providers and also a lot of people, especially from the merchant side, they're saying, oh, we are offering choices, but you have to make sure that the choices are good choices for the consumers. I also believe as participants of society, all of us are also incentivized to live in better societies and help each other. And we have to think of how do we reduce defaults. I don't know if we want to move on to this topic yet, but we all have to think about seeing how BNPL has created some defaults in other countries where it has already been implemented and market has already been matured. How can we reduce the same cases from happening here in Malaysia?
That's some compelling arguments over there. Now, I wanted to move on to the next one, but I feel like there's a lot to kind of dig in there. Does any of the panelists want to add to something that Suraya just said? Arvin, go ahead.
Can you hear me?
Absolutely. Listen. Oh, hey, Dom. Yeah, we can hear you now. Go ahead. I want to get your thoughts.
No, go ahead. Then I will. Okay. Maybe, sorry, there were some tech problems with the iMac. Then I switched to phone, and there was a problem with the microphone. Good that you hear me now. Just to your previous questions, Vincent, right? I think in general, I can't agree more with Arvin, and also what the other guys said. But I think in terms of the comparison between credit card and BNPL, I think if you look from a psychological factor, right, and you go into the brain of the consumers perceive already a credit card, you have to pay high interest rates, right? So it's actually not good for you, On the other hand, BNPL is perceived by the computers due to also marketing. It's zero interest rate, no hidden fees. However, sometimes I wonder if there is a lot of transparency for the late payment fees, because if you look at the transaction value, if the transaction value is very low, then the late payment fee, even if it's just 5 Sing dollar or 10 Sing dollar, could be proportional quite high, right? And so from that point of view, I don't think that the concerns are in general completely not overstated, right? So that may be for your first question, Vincent. Yeah. And the second one, in terms of, is it in terms of healthy consumerism or unhealthy consumerism? We always have to think about, there is, or not forget, there is a specific percentage of the population. I heard in the US it is around 5%. It's a low percentage, but those this percentage of population has a sickness, a compulsive buying disorder, right? So for those guys, I think it could be a catalyst and an accelerator, actually, which is not good, you know. And to be honest with you, I would like to also get the sense from Arvin on that topic, maybe, you know, what he thinks about that.
Thank you, Dom. And
from
think
the other guys as well.
For sure. And I think you have some solid points over there. And the evidence of that is the fact that one of my journalists in Singapore sharing with me that in Singapore, about 1.1 million people have used BNPL service, and 27% of them admitted to being financially worse off due to BNPL mistakes. Now, we don't have similar stats in Malaysia because it's not that prevalent yet, but I think that's an important consideration. Now, Arvin, you wanted to respond to Suraya's statement. And
a lot of stuff to respond to.
A lot of stuff.
Yeah, listen, that study was... there's no date, like there's no information on how that study was conducted, and the information that came out of it is completely out of line with what we've seen with our users, right? We like, I think any good tech startup, we actually ask our customers, do they like using our service after they use it? Do they enjoy it? What is the good thing? What is the bad thing? Because we always want to understand what sucks about our business so that we can improve it. It's a really important aspect of running a growth startup, right? Is that you want to take feedback all the time. And if this was feedback that we were getting, I think, you know, we'd be making some pretty drastic changes to the business. Now, that being said, the way that we started to get ahead of some of this is that we don't give you a full breadth of access as a consumer to go out and use Hoolah as you wish, right? So we actually interject ourselves, and we will stop you from making purchases at a certain point. So you can't just go and shop and get into this spiral. As a new user, we will interject ourselves and say, actually, that's enough. You know, you're not able to spend anymore until you make payment on your previous orders. Now, this is a big potential piss-off factor for some consumers, so we have to say it in a really nice, friendly manner. Some folks do get frustrated. And to your earlier point, Vincent, around investor incentives, this isn't necessarily the type of thing that investors will look at and say, oh, well, you're turning away potential revenue. There is a bigger long-term play here for us, both one, the societal impact and the economic impact for us as a business. Societal impact, I don't want to get into that because I think there's so many ways to argue it. The economics behind it, one is we actually do want people to pay on time. So if they overextend themselves, then they can't pay on time. We're stuck, right? Our business is in a worse position. I think the second piece of that from an economic standpoint is we don't want to get into a transactional relationship with the consumer. So I don't want you to buy one product, use our platform, have a bad experience, and then never use us again because it was a bad experience. The whole point is that you make a purchase, you pay on time, you make the repayments, you buy something else using Hoolah in the future. We have a long-term relationship. You trust us. We build that long-term relationship with the user through that trust that we've established with them, that we are a better option to them than a traditional credit product or whatever else might be in the market for them to get access to that product. And in that way, there's a long horizon play for this, which is tough, right? If you want to look at straight revenue, it's probably not the sexiest thing to do, but we do have a belief that there is a long-term economic play for us as a business as well by doing so.
Thank you for that, Arvin. Well, I guess in a way, your stats might differ from what the market research firm has kind of come up with. We've also not really looked at the methodology, but I sense that maybe a broader data might be more representative in a way that, some BNPL players might have practices that are a bit more predatory that might lead to that kind of outcome, right? Now, I can't speak to your business model because I'm not religiously studying your promotions and whatnot, right? So maybe perhaps your business model does not promote it as much as some of the other players, but I do think there is some validity to some of the stats that's produced by Milieu Insights. Now, I'd like to kind of move on to the next topic about regulation. And I think some of the audience over here is asking who is regulating it? Is there any regulation around this space? Some have pointed out to the KPKT Money Lending Act. But the reality is around the world, there isn't really a very clear-cut regulation for BNPL yet, just to kind of address that point. Even in Singapore, as I'm sure some of the audience tuning in would know, masse is currently studying how to regulate BNPL, how to have the right amount of regulation on it. Locally in Bank Negara, Malaysia, they have also not issued a BNPL regulation. We've also reached out for comments, but they said they will respond to us once they come back to something. But to be clear, there is no regulation. The KPKT Money Lending Act is not for BNPL. It's for money lending. Those are two different classifications as of the moment. Okay, so having set that context, I would like to ask the panelists on their viewpoint on how BNPL should be regulated from one dimension of not to stifle innovation and the other dimension of not to be detrimental to consumers. So we have Suraya on the top over there. We'll get Suraya to comment first, and then we'll get Kevin, and then we'll get Dom, and then we'll go back to Arvin. Suraya, you have the floor.
Now, the thing is, I'm not particularly pro-regulation, but I do see how it can be very, very important for things like this. And I just want to address, like Arvin brought up a really good point. Again, at the end of the day, I do believe that most people are intrinsically good people who wants the best for society. But I do think like among the BN players themselves, because there's no set regulation or even, you also have your own differentiating factors. There are some BNPL players who only partner with luxury goods products. There are some BN players who are doing, other stuff. But I would like to share here one use case of BNPL that a user has sent to me, which is the unsustainable progression of credit limit. So this person has opted into one BNPL service provider here in Malaysia. In early 2020, he was given 250 ringgit of credit limit. By the third quarter of 2020, he was given 550. A month later, it was increased to 1,500 ringgit. Late May, early June this year, it was increased to 3,000 ringgit. And sometime last week, it was increased to 7,500 ringgit. So that's quite very fast progression of credit limit. You can see how the increasing of the limit doesn't seem like where does it stop? Like will they double it again? We have no idea. So that's one area that I would like to see. I also would love to see some sort of regulation in terms of the pricing of items offered with BNPL purchases, just from what people have been sharing with me. Obviously we can't compare some products apple to apple, but with tech products, for example, we have seen some tech products are priced 10%, 25% higher when BNPL is offered. So those kind of prices, and I also agree with some merchants have their own, they offer better service and all that. However, you can see that from a consumer point of view, if the only thing that I can afford right now is through BNPL, but it costs higher, then obviously that is not in my own best interest. So I would say if regulations were to happen, and again, I do not want it to stifle innovation, pro innovation all the way, but anything that would help to reduce again, this is all in the part of choice architecture. Anything that would reduce defaults would be amazing.
Thank you for that, Suraya. So, Kevin, when you address the question, you're also welcome to address some of the comments that Suraya have brought up if you echo or you disagree with some of the things said. But there is some glaring facts that she brought up about some of these practices, right? So we can also dive into that a little bit later. Kevin, go ahead. You have the floor.
I think in terms of regulation, it's my view is that it's definitely a need for the central bank to regulate these activities, because it's new, and there's no what you call certain standard policies in place yet at the moment. Of course, everyone is following the best practices, that has been around. But I think it's timely for central bank to have that regulation, and I know that Bank Negara Malaysia, they are also looking into that. It's just that there's no such policy or exposure draft being released yet at the moment. And I also think it's also good because from a provider point of view, it creates a certain requirement to do this business. At the end of the day, I think you don't want any Tom, Dick, and Harry to do this business, right? Just come in, run the business for 1 year, and then they die off after that. I think that's not what we want to do. It needs to be a sustainable business, with a business case, a business structure, a revenue structure, and whatnot. So I'm pro in terms of regulation, right? In terms of whether it will be an impact in terms of innovation, I don't think so. Okay, because looking at how the regulators has evolved these few years, and they has been quite pro in terms of balancing between regulation and innovation, whether it's central bank or Securities Commission or whatnot. So I'm not too concerned about that. One thing that I want to also echo, it was actually a previous topic, just now when Suraya mentioned about education. Credit card installments has been around for many years, and then there has been a lot of education, even simple one when we first get our credit card and our father and mother will give us the education, that hey, don't simply spend, I know you can use an installment, but please be careful. And that is 101 education, right? And of course, buy now pay later is still very new, so we are not at that stage to have that form of education yet, And I think as the industry grow, when you have got the ecosystem being developed by all the partners like hoolah and whatnot, I think that eventually will be established. It's a matter of how fast is that going to be established, whether it's going to be established within 6 months, 1 year, or a few years, versus to the pickup and the take up in terms of the product, So I just want to echo on that for what Suraya has mentioned. So yep, Vincent.
Thank you for that. I think there's some important points raised up about not wanting some fly-by-night company to actually enter the space and then close shop, and then it has a lot of implications for the consumers, right? I'd like to move on to Dom, but before I move on to Dom, I just want to quickly address some comments that's coming up from Amajit and Dana from the comment section, who's asking if we could kind of follow Australia's regulation. Now, I think as far as I'm concerned, maybe my information is outdated. The panelists can correct me if I'm wrong. I think Australia doesn't have a full regulation yet. It's more of a self-regulation from the industry itself. So as of now, there's no actual policy paper that we can actually turn to say, hey, this is something we should emulate. Now, let's move along to Dom. Dom, what is your take on how this should be regulated? What kind of approach would you like to see in this space?
Yeah, I think I can reflect what Kevin and also Suraya said before. Suraya mentioned that she's also not a big fan of over-regulation at the end of the day. But I see it, if it protects the consumers, that you don't increase the debt burden of consumers unnecessarily, then it makes sense. But then also, if every BNPL player would just follow very ethical standards, for example, like Arvin actually has outlined in the previous question, right? Then maybe self-regulation is just sufficient in general, But I believe there will be some regulation coming, what you mentioned, Vincent, already, that MAS is looking very closely on that topic, and I'm very concerned, especially with the debt development of young people here in Singapore, and this can be reflected into any other country in general. Yeah.
Thank you for that, Dom. Now, self-regulation sounds like a kind of utopian solution for a lot of industries, right? But oftentimes when we observe other industries that self-regulate, there is some cracks sometimes. And if you have a lot of players entering the market, sometimes market pressure pushes you to do things that may not necessarily be ideal. It may be predatory. We've seen that in incumbent financial services. We've seen that in other sectors as well. So I guess that's also a question of how do we move forward with self-regulation or regulation, and what's the kind of balance. Arvin, being the last on this very wide question, I'm sure you have a lot of comments. So go ahead and
Yes.
tell us your views.
Awesome. Actually, just for the note that you just made with respect to industry regulation, or call it industry bodies coming together to manage a certain sector, I would contrast that with saying that even in regulated sectors, not everything is necessarily operating in the best interest of consumers, right? Banks are very much regulated. Not necessarily their revenue streams are in line with everybody's best interests. So I just want to call that out as a fact as well. But listen, we've never shied away from conversations with the regulator. As we enter new markets, and we've talked about the new markets that we're going into, we welcome those conversations. Before we wrote a line of code for hoolah, we actually met with the MAS to have a conversation to make sure that we were comfortable with the approach that we were taking to launch our solution in the market and get that process in place. We continue to have regular conversations with the regulators, and we align ourselves to a business model that is in line with what the regulators' interests are with as well. And I do anticipate that, while there might not be a regulatory approach or specific regulation, there probably is going to be some feedback presented to some specific BNPL players on practice and their approaches. So, I anticipate some of that coming. But in general, again, we need to play a bigger role, everybody. I think there was a question earlier, like whose job is it to educate consumers and to make them aware? Regulation or not, we're going to have to play a role. Everybody in the BNPL industry, folks like Suraya who are going out there and getting the word out with respect to what is out there, some of the challenges with it. We need to embrace those conversations and contribute to that voice as well. The key thing here is the balance with respect to supporting innovation when it comes to bringing safety, security. Dom, I get that point. It was Kevin that made the point earlier with respect to regulation and innovation. I'm not sure. I think there's certainly enough evidence out there that it can impact the innovation approach, because who's going to define what is a fly-by-night business, right? 4 years ago, going into a conversation with the regulator, we didn't have hundreds of millions of dollars in the bank to say this is a business that we have. We had a business model, we had some technology know-how, we had industry knowledge, we were experienced when it came to payments. But what would we be classified as a fly-by-night business back then? And if regulation was in play, it would be, nope, you can't start this company, right? And I think the regulator actually took a really, really innovative approach to say, you know what, we want to see what you could contribute to the fintech ecosystem. We want to allow the ecosystem to get to the right place. I will say that right now, we are a long ways away in our part of the world from having the intense amount of innovation that can happen in fintech. Just the last point, I think Suraya made a note earlier with respect to surcharging. It's a really interesting one. We've shut down our relationships with merchants for attempting to surcharge on hoolah. So charging an additional incremental fee or trying to pass through some sort of fee for consumers. That's not allowed with our business model. We're pretty firm about it, and we have stepped in. Consumer flagged it to us once. The next day, the merchant was offboarded, because it's in our terms and conditions with how we work with our merchants that you cannot surcharge. If it's 100 ringgit paying with a digital wallet, it's 100 ringgit paying with hoolah, broken down the price. So there is no surcharging on this.
Thank you for that view, Arvin. Just a quick follow-up question before we jump to Dom. Now, I guess if you guys are able to turn down merchants for surcharging, you must be in a reasonably okay financial condition in your company to be able to have that kind of ability to do so, right? But what if we enter a time in this market where it is so competitive that it may not be business, like from business viewpoint, sensible for you guys to do that? Like, would then not be the temptation to then, okay, you know what, since some of these merchants can go into other players, like, you know, Ben is bringing up like Hoolah Pay, Split, Atom, and IOU Pay, and just numerous companies coming in on a weekly basis, right? Are you confident that in the months to come, in the years to come, you are able to maintain that stance despite market pressures?
It's a really good question. It's why we put responsible affordability in the vision statement, right? Because every company needs a North Star. Regardless of what your business model is, you have to have a philosophy that you prescribe to, because you go out and you hire people that align to that philosophy and that vision statement. So we want to bring people into the company that agree with that vision and that construct that we want to build. If we can't have that, if we can't maintain that and sustain that, it's going to be hard for us to run this business long term as well. So I think that's the reality of it, is that if we're not true to what we set out there as our vision and what we want to deliver as a business, it's probably the wrong business for us to be in. Now, I come back to that long-term argument. I actually really think that has long-term positive economic play for our business. Taking these steps, we listened to a user, right? When we shut down that merchant, it was because a customer came to us and said, hey, I know you guys don't allow this. Why is this merchant doing this? And we're like, oh, wow, thanks for flagging that. We're going to take action. We can go back to that user now and say, hey, because of what you said to us, we took specific action about it. We're now going to build a stronger relationship with the consumer side as a result of that, right? I think that's where the trust really sits. And I won't talk about BNPL or fintech, but specifically a payments company. When you're dealing with money and a user, you have to have a position of established trust in order to get them to continue using your service, or else you will erode that really, really quickly if you're ready to give up your I won't call it ethical position, but at least the soul of the business, because things are difficult.
Thank you for that, Arvin. Now, I do hope that, you know, as you progress along in your journey in Hoolah, you would be able to maintain that philosophy. But, you know, we've seen Google, whose initial phrase was "Don't be evil." We've seen WhatsApp, who said their founding mission was they won't sell the data, right? So I hope that that's something that continues to be true. Let's see how it pans out. Let's move back to Dom. Now, Dom, my next question is looking at the practices of BNPL and maybe what you've observed in your own experience as well, right? Now, a lot of BNPL operators and a lot of the conversations we had earlier talks about, yeah, you know, let's use BNPL for more productive spending, maybe get an ergonomic chair so that you can work a bit more comfortably at home, right? That's always the PR message that we also get in our inbox as well, you know, or buy groceries or whatnot. But when we see the marketing materials that comes out, it's often very get it now, buy now, you know, there's a lot of very predatory kind of campaigns that may not be transparent. So do you think there's a jarring difference between how BNPL operators position themselves versus what's actually being practiced?
Yeah, definitely. I mean, I think every BNPL operator, by the way, we are not a BNPL operator at Episode 6, we provide the tech stack behind. Every BNPL operator acts differently, right? So I like the approach from Hoolah and Arvin, actually. So the ethical standard, you know, the long-term approach, etc. But then also you have to see at the credit policy, for example. At the end of the day, it's always to act in the interest of the consumers, right? I mean, it's a business as well. The BNPL operator has to earn money as well, right? But they can just earn money, to Arvin's point earlier, if they have long-term relationship, long-term clients, right? So retention rate has to be higher, etc. But definitely, I think there is the big difference between some of the BNPL operator, you know, and if that all wouldn't work out, then we come back to the previous topic, actually, then the regulator might have to step in general to protect the consumers. Yeah.
Thank you, Dom. And what about you, Kevin? I mean, you guys partner a lot of BNPL operators. I'm sure you also pay attention to their marketing, their business models. Have you seen that kind of jarring difference between messaging and reality?
To be honest, actually, no.
No, okay.
Yeah, to be honest, no. I mean, I've not really seen anything that really bizarre me, you know, in terms of what they put on, you know, in terms of the PR and on the marketing material. You know, I don't actually see that. But one thing that I would like to point out is that, you know, I give an example of an optical shop, you know, optical merchant, which we also recently signed up for buy now pay later acceptance. You know, traditionally, you know, optical shops, I mean, we're not talking about the big ones, right? The chain which has 40, 50 outlets. We're talking about probably a merchant that has probably 5 outlets, you know. And traditionally, this type of merchants, they won't, you know, probably not eligible for installments by the banks, you know. But with buy now pay later, it actually opens up a new target segment for them, you know. You know, having to let's say, for example, if I'm buying contact lenses, which last me for 3 months, for example, you know, then I can then pay over 3 months instead of pay one time, because the usage is also across 3 months, you know. So that's one example. And I think education to the merchant is also very, very important, you know. It's not just to the consumer. Again, you know, our business is very much to the merchant, you know, and how the proposition is being communicated to the merchant, and they are supposed to again communicate the right message to the consumer, you know, and not what they call diverting them, you know, and not communicating the wrong message. So I think that is very important, and I think that's what we do from a GHL standpoint, to ensure that, you know, they don't, you know, sell the wrong thing, you know, they won't sell the wrong value proposition to the customer, you know, especially this time when BNPL is still very new, you know, and you don't want to be telling the wrong thing to the end customer, you know. If it's a mature market, then I think it's not so detrimenting, but because it's still new, you know. So yeah.
I guess given your experience working with merchant, you do come from a point of educating them, right? Because you do deal with thousands of merchants in Malaysia for your various payment services anyways. Well, thanks for that view, Kevin. Suraya, in your observations, have you seen that kind of jarring mismatch between reality and messaging?
It's not a hard question to answer. The easy one is yes. Even the term buy now, pay later is a call to action. Buy now, pay later. That is the opposite of the good financial habit of delayed gratification. So how can a BNPL provider tell a consumer that you should exercise, you know, think about it, when the actual practice is called buy now, pay later? I'm not gonna argue against the whole, yeah, you can get better quality products. Yes, definitely. I don't really care about people who can afford to pay off their installments every month, but I do care about people who will end up defaulting. So I think there is that part of you know, customer protection that has to be inbuilt even within the systems. And I think Arvin has given a really good example of even stopping the problem even before it happened, with merchants who arbitrarily raise prices. But also, you know, it cannot, financial education doesn't just mean content marketing, doesn't just mean blog posts, doesn't just mean you know, those kind of things, when at the end of the day, when the consumer is prompted by some influencer to buy a product or a service, you know, it caught them at a bad time, they're feeling bad about their skin. I'm like, oh, okay, I'm gonna buy this moisturizer, and then they can't afford to pay it off. So those are the kind of like instances where I feel like it could be problematic for society. But again, I would be happy to hear from the fellow panelists on how they can build in at least a little bit of element of delayed gratification inside a platform that promotes instant gratification.
If I ever see Arvin's platform promoting to me hair installment for 3 installment free, then I would be sure to call Arvin out. But to your point about the whole term buy now, pay later, right? I think I remember seeing one of the wealth tech companies in Singapore, and I think Arvin, you might know him as well. I think, what's his name? Akin from Bamboo. And he was talking about maybe the industry should come up with a save now, pay later, save now, buy later platform or something, right? Like you invest in stuff, you raised out the amount and you use that to like finance whatever purchases you have. And I thought that was a pretty interesting idea.
Yeah. It's a great concept, but it's not new. I think there's a great products out there. We haven't seen the proliferation of it necessarily in this part of the world, But there's some great products that will help you save towards specific goals. Like you set specific goals of what you want to achieve, and they will funnel away a little bit of what you save over time towards that goal.
Yeah,
so it's a great solution.
Like a PFM sort of tool. But before I jump to Arvin, actually, the reason why I'm still keeping Suraya on stage over there is because I had a follow-up question, and I'd like to steer things up a little bit, right? Just to keep things interesting. So, of course, Suraya have argued against BNPL on stage and also in the past as well. But in a way, aren't the same problems also prevalent in the credit card industry? So why is it that there are so many vocal opponents against BNPL? Like, do you foresee the impact to be bigger than credit card, or is just a new shiny thing that everybody's just talking about? What's your views on that?
Because we're bullies, that's why, Vincent. The answer to that is because credit cards, they don't get off the hook. We do, once in a while, call them out. It's always been weird when they give out some talk about the importance of saving money, the importance of, they give out all this financial advice, and then you see your email, they have this marketing email, they have a sale, and I've had calls of people offering me personal loans, suggesting me to get stuff like TVs or go for some trouble. So they don't get off the hook. But I'm glad you brought it up, because the only difference is you have to apply and get approved for credit cards. You have to prove your ability to repay, whether or not, and even so, they found out that many people still default on their credit card payments. And with all this hoo-ha that's happening with the moratorium and all that, people are really financially struggling and they can't pay off their credit card debt. And then they dig themselves out of they have to dig themselves out of that cases with AKPK is increasing. And you have to understand that there's this loop that happens when people get financial anxiety. So that's the reason why poor people tend to make poorer financial decisions. When you get financial anxiety, you get into poorer mental health state, and therefore you tend to make worse financial decisions. So it's just about protecting consumers so that they don't get into that dreaded loop of buying stuff in order to get yourself to feel better just momentarily. But to answer your question really quickly, sorry if we appeared like bullies. It is true, like you are new. It's just easier to to kick it on the curb while it's still up and coming. But again, credit cards is a very regulated industry. I have heard about how they are being they go through so much processes with Bank Negara Malaysia. So Bank Negara Malaysia is doing that for us right now. When like Vincent have shared, when you bring up the topic of BNPL to them, they said we're still studying it. Therefore, we have to step up and do these kind of things.
Well, I mean, there can be responsible BNPL. I think there can be responsible bullying as well, right? Moving along to Arvin. Arvin, now, of course, it'd be quite kind of
strange.
Do I get to pick on the banks? No. Yeah, I guess it's strange to ask you whether there's a jarring kind of difference between your messaging and reality, because obviously, from your viewpoint, it's consistent with your practices and your beliefs, right? So maybe you can speak to some of your other competitors, like without naming names. Have you seen that kind of practices? If you want to name names, it's fine.
I have. No, I have. No names. I can name campaigns. I think we talked about this earlier. There are some campaigns where I'm in complete dismay that they would even go down that route to essentially say spend as much as you can within this 24 or 48 hour period to get some sort of incentive. I think this is completely crazy. Like from a technical standpoint, like our technology would not allow us to run that type of campaign. So our marketing team has never brought it up, but even if they did and wanted to run something like this, the answer is simple. No way, it's not going to happen. One, it's not in our philosophy as a business to do it, but two is, no, if you do a couple of orders in a short period of time, boom, you're stuck, right? And nobody is going to call you from Hoolah to say, hey, we noted that you've not, you paid back on time. I want to upsell you to a big old credit limit. It's not going to happen. Listen, I've gotten that phone call 4 times in the last week from a major global bank. I'm a startup founder. They're using data from probably when I used to work for a really big corporate on my salary position rather than my current position, and they keep trying to upsell me on a very, very, very large credit position, not a credit card. They're trying to give me a line of credit now, that is very significant. For me, that's not exactly a responsible position, and it's not based on any real live data. We actually make a decision on the consumer side on an order basis. So it's not because of X or Y. We'll actually make a decision to approve or reject that order based on the data around that order. And it is a non-traditional approach, but it, for us, serves a much better impact. Now, it was, with respect to how we run those promotions and others running promotions, because I think it's definitely some activity that I'm not a big fan of when it comes to how things are being done, and even some of the business constructs of how people are operating their business and how funds flow around, not necessarily going to last as well, right? Yeah, like emails to take advantage of rebate promos, those types of things. It's not to say that we don't promote our service, right? We have a loyalty program. Customers that come in can get an incentive to use hoolah for the first time. They can refer friends and family. Like any other tech company, digital banking, wallet, we will use these as mechanics to grow our business, but we still reserve the right to make the final decision as to whether or not an order will go through or get rejected. I think it's a really important position. And I said earlier, like, it doesn't always make you friends, right? You will have tough conversations. Our customer support team is in a really difficult position sometimes. I look at the conversations, I review some of the conversations we have. It is tough, but they have to be firm. There's no override functionality. An agent can't go in and say, let me manually approve this order for you. It doesn't exist for a reason. We won't be allowing that to happen.
Thank you for that, Arvin. Now, I think it has been a really interesting conversation, and I like the balance of the view that we're getting from this panel. If I had a choice, this probably would go on for another 3 to 4 hours, but we've unfortunately run out of time. So maybe we'll start with Dom, Kevin, Suraya, and then back to Arvin. And I'd like to invite the panelists to first share with us their closing thoughts, all things considered from today's conversation. Is BNPL good, evil, or and the second part of it is to maybe if there's any pros and cons that you feel is important to highlight that hasn't really been highlighted, feel free to go ahead and share those parting thoughts with our audience. Dom, you have the floor. Please go ahead.
Again, what I mentioned earlier, I think it's always easy to say it depends, right? But it really depends on the perspective you're looking at. I think, for example, if you use BNPL for financial inclusion to actually get the unbanked population, for example, use that solution, I would have question marks, for example, right? Because they're not very experienced and educated about that topic, etc. But I mean, there are benefits, there are pros, there are cons, right? I think in general, if you, as a BNPL operator, if you do it in an ethical way, to balance out earning money and in the interest of consumers, it can be a good tool in general, right? But there are, again, pros and cons for everything, right, in general.
For sure. Thank you for that, Dom. And Kevin, what are your closing thoughts and maybe some pros and cons that you want to highlight before you go? And the answer, whether it's evil or good. What's your stance, all things considered?
Well, I don't think I'll answer that whether it's good or evil, but I think what is interesting to see is that for the next 6 months or 12 months is that how will all these partners differentiating themselves, and what is next, after this, after providing them the basic buy now pay later products, would that be an extension to it, for example, enlarging the ecosystem by issuing virtual cards, for example? Would that be the next stage, or whether is there going to be certain rewards or certain loyalty programs that's going to be tied in, So I think that's going to be quite interesting to see how will that evolve, and very much differentiating themselves, for the next 6 months to 12 months. And of course, the last part is that and how do we balance in terms of innovation versus regulation? I think that would be an interesting view you can have from the regulators like BNM. Yep.
Certainly. That's also one area we're paying close attention to as well. Suraya, do you have a definitive stance of good or evil and any additional thoughts you'd like to share with us?
Yes. Throughout this chat, I'm glad to see some form of self-regulation that happens even within players. As an individual, I am very much still leaning towards, I think it does more harm than good argument. And I am kind of mentally preparing myself to a future where I would see most of my peers will be in a horrible financial position. I hope I'm wrong. I would love to be wrong. But until then, I'm just going to keep my fingers crossed and trust the people who are operating here in Malaysia will do the best for both their merchants and also for their consumers.
Thank you, Suraya. And Arvin, your stance and closing thoughts?
I think I've probably put my stance out there, but I will summarize it slightly differently than just saying BNPL is great. I think not all buy now, pay later providers are in the same boat. I think that's become quite apparent with the discussion that we've had today. Not every company in any segment is going to be built the same. And the philosophy, approach, go to market for different companies is going to set them apart. I think to Kevin's point, how are we going to differentiate? Our philosophy is going to be one of the ways that we will differentiate. And I know it sounds a bit wishy-washy and it's philosophy. It is important, from how we conduct our business to how we interact with merchants to how we hire our new team members. It does impact the approach that we take from a business standpoint. On Dom's comment around the users, I think there is probably a bit of misconception around who the ideal user. There was a question from the comments that came up, like, what is the demographic? It's actually much, much broader than, say, in the US, you see 18 to 24 get thrown around as the age range for BNPL. Our age range is probably more peaking between 25 to 35 as our users, where the bulk of it happens. It is a much broader range because I think of the makeup of the products and the life cycle journey that we take with users as well. I think for the merchant side and the value and call it pros and cons, but the way that we see ourselves headed next is to create more value for the merchants. And this came up in a recent conversation I had with one of the Chamber of Commerce conversations on SMEs and how we can support SMEs, new businesses. We've actually worked with Visa in Malaysia to support their Where You Shop Matters initiative, which was really SME centric. We're going to be doing a lot more work in that area in terms of supporting the SME community, because I think it's important that we are able to get those those merchants more eyeballs, more discovery, help them get out there and help people understand that there are all of these great local merchants that they can look at and get access to. So I think we see ourselves as a channel to help drive more awareness of some of the smaller merchants as well. And finally, on that last bit of how do we protect users or an entire group of consumers, I don't want to just bank on hope. I think, Suraya, it's a good positive position, but we need to do the work, right? We're not exempt from this. We need to step up. We need to spend a lot more on the community engagement, whether that's in our Telegram groups or Facebook channels. We need to have these open conversations with our users. We've made some investments into working with financial advisors in the past. I think that's something that we need to do more of so that they can get the word out on how they use our hoolah solution in an effective manner and a safe manner, and put it bluntly to consumers as well. Like, this is what good looks like in terms of how you can make use of hoolah. So, we're not exempt from that. We need to continue investing in that, and we need to do more in that space as well, so that we can have a proactive voice in terms of shaping how it gets used.
Thank you for that, Arvin. And I really enjoyed today's conversation. I like how there is one strong against, there's one strong for, and two neutral parties. It really adds to the balance of the conversation. So it's really good. Maybe just to kind of add my views to wrap up the conversation. I think right now, if you look at BNPL, whether it's good or evil, it's both. Right, we have people who have better practices and we have people who have less than ideal practices in the market. Moving forward, like all the panelists have said, some degree of self-regulation is required. And we really do hope as we move forward, regulators from ASEAN will step up and look at regulating this before this becomes too big of a problem, and protect the users and balance that with innovation. With that, it's been a great conversation. I really thank over 200 of you that's tuning in live from Facebook, LinkedIn, and across our various platforms. Really appreciate all your time, and have a good evening, guys, and a good afternoon rest of the day, and we'll hope to see you in our future webinars. Take care now. Bye-bye.
Thank you. Bye.
Thank you.